Hello, everyone, and welcome to Momentum Channel. My name is Mo, and in this video, I'll be talking to you about 3 stocks that I plan to buy in the stock market in the week ahead. At the end, I'll also share with you my latest dividend income. Let's get into it. Our very first pick of the stocks to buy in the week ahead is no other than Bank of Montreal, with ticker symbol BMO. Bank of Montreal is traded both as a US dollar stock on New York Stock Exchange, but also given that it's a Canadian bank, it is available for Canadian investors through Toronto Stock Exchange with similar ticker of BMO. Here we're looking at the stats for this stock and different parameters related to it from a lens of US dollars. For instance, the dividend yield is hovering close to that 4.5%, and it has a dividend safety score of 70, marking it a safe dividend payer. It was last traded for the price of $96.97 in US dollars, and Bank of Montreal has a market cap of $64.5 billion, marking it a large cap size business. It has a beta of 0.75, which is considered to be a low volatility stock in that sense. As for Bank of Montreal, it is worthwhile mentioning that it is headquartered in Montreal, as the name suggests, in Canada, but it is a bank operating in North America, both in Canada and US. In fact, with approximately 900 bank branches and 3,300 automated banking machine ABMs across the two countries, and was founded in 1817. Looking at the dividend metrics, the payout ratio currently for Bank of Montreal is around 34%, but its forward payout ratio is at 41%, which it may sound edging higher for banks. That being said, though, it is in line with what this bank's estimate is. In fact, if you look at the Bank of Montreal own dividend information on its website, they do indicate that their policy is to pay out 40% to 50% of their earnings in terms of their dividend to shareholders over time. So there's that alignment in there. Looking at the latest projections for their dividend dates in 2022, the dates are shown as well and discussed through their website. For instance, at the time of making this video, their upcoming dividend payment date would be in August. In fact, for their common shares, you're looking at August 26th of 2022 for your dividend payments, and that would be for the amount of projected at this time of $1.39. It might be of interest for investors to know how Bank of Montreal did during the recession. So if we look at the recession years of 2007 to 2009 during the financial crisis, their amount of their sales or revenue was down by close to 11%. However, their stock actually did quite poor at that time, was down by 65%. In terms of their dividend payment history, for Bank of Montreal, it has been paying its dividend uninterrupted for the past 26 years. However, it's worthwhile mentioning that during the year 2020 and 2021, they did maintain their dividend at the same level. They didn't increase it. As a result of that, it broke their dividend growth streak. Hence, they have to, again, continue to build that streak. We know that, though, in 2022, the year that we are in, they've already increased their dividend amounts. And it's actually, you can notice that here, the last time they paid it in Canadian dollars, $1.33 per share. And in August, the upcoming dividend payment would be $1.39. If you are an investor and want to take advantage of this increased dividend, you have up until the ex-dividend date before this date of July 29th. If you have shares before July 29, you would be entitled to that $1.39 dividend per share. Currently, based on this estimates, the annual payout is at $4.34, and Bank of Montreal does pay its dividend quarterly in the months of February, May, August, and November. Looking at their dividend yield, it is currently about 15% above their own 5-year average. And as for their forward to price to earnings ratio, it is lower than their historical 5-year average. Their historical 5-year average forward price to earnings ratio is at 10.2, and they're at 9 right now at 9.1, suggesting better valuation for this stock at this time. What's more, their last price in US dollars is hovering very close to their 52-week low price, which makes this stock much more, again, enticing and interesting at this time for investors to consider. If we look at the stats for Bank of Montreal on the Toronto Stock Exchange, the last trading price was $123.78. Remember, for the Canada Day on July 1st, the stock market was closed on that day. That's why this is not reflecting the positive return that the stock had in the US dollars trading day. That said, in the past 1 year, you'd see how the stock price have hovered and changed. It was upwards of close to $154 $4 or so at its 52-week high. And right now it's hovering very much close to that 52-week low prices that it has hit. What's of interest as well is the insider activity. You notice the past 6 months, you're seeing some insiders buys, which always is a positive sign for us to observe and notice. With its price to earnings ratio at very historically low levels for the Canadian stock, when it comes to the Canadian currency at only 6.8, it does really makes the stock quite an enticing option with its dividend, as well as mentioned, close to that 4.5%. Now, our second pick here is Invesco QQQ Index ETF. It is available in Toronto on Toronto Stock Exchange with ticker symbol QQC.F. It's very similar to the triple Q that is available for US dollar investors. The premise of this investments option is really seeking to replicate to the extent possible the performance of the NASDAQ 100 index. And as we all know, NASDAQ has had a rough start to the year. In fact, the NASDAQ composite as a whole has been close to negative 29% return so far in 2022, which is why for investors who are bullish about the future of NASDAQ and knowing that at least based on history, when NASDAQ does perform poorly, after a while, it tends to really outperform and do really well and recover very nicely. For example, if you look at the past 5 years performance of NASDAQ, look at it. Every time the NASDAQ has been hit hard, it has recovered over time very nicely and rebounded amazingly. In this case, you'd see how in 2022, we are showing quite, the huge declines in this part. And look at the year's performance. Like 2017, they were up by 8%, 2018 by close to 30%, 2022 close to almost 59%. And as we talked about year to date, close to negative 29%, which is why we wanted to take advantage of that and add to our existing shares of QQC.F and bring our average price down. This Canadian ETF allows investors to get exposure to the NASDAQ 100 through Canadian hedged, easy to invest in Canadian dollars with a fairly decent management fee of only 0.20%. And an MER of 0.22, which what this means is that if you invest $10,000, you would pay a fee of $22 by holding on to this QQC.F. Top holdings as part of QQC.F, as you know, not surprisingly, is giving exposure to Apple, Microsoft, Amazon, Tesla, Google, Meta platforms, Nvidia, Pepsi, and Costco. These top 10 account for roughly 52% of your exposure. We currently have only about 4 shares of QQC.F, and these are down by about 15%. We would like to add to our shares in the week ahead. Most likely, we will be buying around 1 or 2 more shares of it and add that to our portfolio in the week ahead. Lastly, our third and final pick to buy in the week ahead would be shares of Shopify. Now, Shopify used to be priced at much higher prices, but recently they've actually gone through a stock split, and they had a 10-for-1 stock split, bringing the cost per share way lower, making it easier for many investors to get their hand on the shares of Shopify. Though in reaction after that was done, on that day, Shopify stocks fell down by about 6%. And it's worthwhile mentioning that it was one of the several technology companies who decided to go and do a stock split. Amazon and Google both had their own fair share of that, and Tesla also had announced recently plans for a 3-for-1 stock split as well. Looking at the Shopify stock now, in terms of the last price in Canadian dollars, it's at $40.22. For investors outside of Canada, Shopify is available in US dollars that you can take advantage of that and buy shares of Shopify if that interests you. In terms of the return, if you look at the return for the stock, look at that. In the past 1 year, the stock is done huge, losing almost close to 60% or so of its valuation in terms of the stock price. In terms of the insider activity, you are seeing in the past 6 months, there's a much larger group of investors who have actually bought shares of Shopify compared to those who have decided to sell. So, for example, close to 6,600 shares of Shopify were sold from insiders, but close to 36,000 of shares were bought. In terms of their price to earnings ratio, it is quite high at 212. That said, Shopify stock is definitely a growth company. And if you look at it the longer time frame, for example, the past 5 years, the stock is showing to be up by 256%. And the maximum return for it is upwards of 1,000% return. If you look at the projected revenue for the stock, the revenue is projected to continue to grow. In 2022, they're estimated to have $5.8 billion. And in the following year, in 2023, they're estimated to have $7.7 billion in total revenue. If you look at earnings per share as well annually, the projections for this year may not be the greatest. It's estimated to be at 0.09 or about 9 cents per share compared to the actual of 64 cents per share earnings that they had in the year prior. But the story is going to be a little bit better in 2023. They're estimated to have 23 cents in terms of earnings per share. In terms of the valuation for Shopify stock, in terms of their enterprise values to sell, they are currently trading at about 6.9 or about 7 times their sales. And in terms of the price to book value trailing 12 months, we are seeing a ratio of 4. As for us, we do have now shares of Shopify. We have 16.8 shares of Shopify, which is down by close to 46%. We would like to bring our cost average down and buy shares of Shopify in the week ahead. If you look at the 52-week price now, following this stock split, the 52-week low price was at $38.63, and the 52-week high price was at $222. With our average price currently sitting at $74.96, we want to add more shares of Shopify and bring our cost average down. Now, as promised, I wanted to share with you my latest dividend income in my Wealthsimple Trade account. You notice the last dividend we received was from 𝗖𝐋𝐈𝐖𝐊 for the amount of $1.87. We also received some dividend amounts from 𝗖𝐋𝐷IV. These are distributions paid by the 𝗖𝐋𝐷IV high dividend index ETF. We made a video recently talking about high quality dividend paying ETFs for Canadian investors. I'll add the link to the video description as well as the video card. So be sure to check out if that video interests you. We also received a $5.28 dividend from Manulife Financials. Before that, we received about half a cent from Artis. This is a REIT in Canada. We received $1.50 from DGS, and we received $3.11 from Skyworks Solutions. Earlier in the month, we did receive some dividend from VDY. We received some dividend from Cars and some more dividends from 𝗖𝐋𝐷IV as well as PDI. Those were some of our dividend income that we received in the months of June. Also, thank you so much, everyone, for watching this video until the end. I hope you found it beneficial and you gained something of value from it. I would love to hear from you and know what stocks or ETFs you are planning to buy and add to your portfolio in the week ahead. Leave me a comment down below and share that with me. I really appreciate it if you can give this video a thumbs up and share it with someone else who might benefit from it. And of course, subscribe to our channel here on Momentum Finance. We post every week several videos about investing, including investing in dividend stocks, growth stocks, penny stocks, and crypto. We also talk about ways to reach financial independence. Thank you, and I hope to see you next time.